Hello there. Welcome back to Accounting Space. In this video, we want to look at a common test of April 2021. So we're going to look at question two on that question paper. So this is our question paper that we want to look at. Our question two has got 40 marks. So out of indirect taxes. And we know that when we're talking about indirect taxes, uh, these are taxes that are levied upon goods and services before they reach the customer. Remember, the customer is the one who is directed to be charged the tax, but this tax is charged before the customers get the goods. That's why we have the indirect form coming in. So the customers are the ones who ultimately pays the indirect tax as a part of a market price of the goods or services purchased, but they don't pay the tax directly. So basically, that's what we have in terms of indirect taxes. So our question requires types of indirect taxes. You're going to see that we have various types where we put a fuel levies as part of indirect taxes. We also have customs duties. We can also talk about value-added tax. So we have mentioned in our other section. Going to our other section, we see that the first value-added, we've got fuel levies. Question, calculating gross domestic product. We're going to see that is that first we can talk about the issue of accuracy. It ensures accurate national aggregate figures. And then we can also talk about the advantage of avoiding double counting. It avoids double counting. So those are the reasons that are mentioned when national aggregate figures, which is figure performance. So firms goes to firms in the year firms. So basically that's the standard that we have in terms of the diagram. Then 2.2.1 reads identify the market that is involved in trading with labor in the diagram above. So we know that labor is traded in the factor market. So we are talking about the factor market. So moving on to the next question, which participant offers final goods and services for sale? We know that the firms are the ones that offer final goods and services. They produce the goods. So obviously they offer them. So we have the firm or business on 2.2.2 being the answer there. Then 2.2.3 briefly describe the term a circular flow. So for the description of circular flow, you would see that we can define it as a model of the economy in which the major exchanges are represented as flows of money, goods, and services. So basically, we have it's scenario whereby we are having different various participants that we have in the circular flow model. And obviously, there is an issue of exchange of goods and services and also money between the participants. So basically, that's what we intend to circular flow. But we have the description in our answer section whereby it reads for the explanation of circular flow, we are saying it's a schematic framework that demonstrates the relationship amongst participants, and we are talking about the flow of production factors, goods, services, and money in the economy. So basically, this is the description that we have. Then moving on to the next report, why are savings regarded as leakages in the economy? Obviously, as we have savings, we are going to have a reduction in the income that is circulating. Remember, income savings is described as income that is taken and it's kept somewhere without being utilized. So obviously, it becomes a reduction of income that is circulating in the circular flow. So it is a leakage. So leakage are describing a reduction. So in 2.2.4 on the other section, the reasons are stated here by saying the first point is they are kept away and not used by the income earner. The money is not circulating in the economy for some time. So, of course, that's why we regard it as a leakage. And then second point, savings decrease the amount of national income in a country. So that's another point that we can also include. So moving on to the next part, we have 2.2.5, how does foreign sector interact with the South African economy? So obviously we know that the foreign sector, how it interacts with the local economy is through exporting and importing. Basically, that's that. So, but we have the points are illustrated in our other section, whereby we are saying the first point is saying demand South Africa's exports. Remember, we sell outside the country, and that's exports. And the foreign sector is the one that demands our local products and services. So the foreign sector demands South Africa's exports and supply South Africa with foreign imports. So from the point of view of imports, the foreign sector is the one that supplies the goods and services. Then the second point, demand and supply of South Africa's currency during international transactions. They also demand our local currency, that is the rand. And then third point, supply South Africa with other foreign currencies from the rest of the world. So here we can maybe just correct here from the rest of the world. At the government for importing and charge taxes for bill of exports, and foreign sector is one that charges the local. The locals is they sell goods outside the country. But in the case of imports, the South African government is the one that charges the products that are entering the country. So basically, products entering the country describing the imports. So basically, that's what we have. Then we go to the next part of our question. We have now 2.3. Start the table below and answer the questions that follow. We are given a given of measuring our national income, and then we got information in the table below. The first question is saying identify a table. So we know that remuneration is described the elements that are given as compensation of employees. So basically, we are saying compensation of employees for 2017 and 2018. So basically, we are going to say the 2018 and 2017, whereby we are saying 1,748,750. We see that the answer that we are supposed to get is going to be a negative. So we can try to calculate to see which is the correct answer there. So we're going to see that if you calculate correctly, you're going to get 1,524. And it's a negative figure. So we have the negative 1,524, which we have also stated on our answer section, and we should show it as a negative. Since we are seeing that it's a reduction. So going back to point 3, describe the term gross domestic product. And we know that gross domestic product is the market value or the monetary value of goods and services that are produced in the local economy within the national boundary. So basically, if you go to the other section, we have the description of final goods and services in a particular period of time. And the period of time usually is annual, which is after a year. So this is what is the importance of accounts. So we also try to see the importance. So if we try to come up with the importance there, we are going to see that we can talk about we can talk about the. So we can say consumption of fixed capitals, and then second, the book value of fixed assets that we have that are fixed capital. So moving on to the next question that we have. So on our next question is 2.3.5. It is calculate net operating surplus in brackets A for 2018 from the table above. Show all calculations. So net operating surplus. So we are going to, first of all, we are going to calculate the compensation of employees plus consumption of fixed assets. So basically, we are going to say, according to figures given, we are going to use the values that we have for the same period, which is 2018. So if you calculate there, you see that you're going to say 197,910. So if you add the two, you are going to get a total of 1,072,305. And then figure the total that we get here, subtract it from the gross value added in factor cost, which we have now saying 800, then we subtract 385, 76,195. So basically, this is the calculation that we have on our answer section, which is summarized on 2.3.5. So moving on to the next question, it reads, difference between injections and leakages in the circular flow, but we basically know that injections represent additions in the circular flow, and leakages represents reductions in the circular flow. So from that point, we can now be able to come up with differences that we can try to see. For example, we are saying under injections, it indicates all man-type flows that are added into the circular flow, whereby leakages, we are saying all man-type flows it represents all man-type flows that are subtracted or withdrawn from the circular flow. So basically, that typical difference is the one that we are supposed just to point out. So going to our answer section, we have them listed, whereby we're saying first point for injections, these are describing under description that we have under injections, whereby saying first point, all man-type flows that are added in the circular flow. And then if you go to the next investment spending and post injections, then consumption spending by the households is also an injection, since spending those are the typical points that we have under injections, then leakage, and then post. So we can flow that are added into flows that are withdrawn for, but consumption spending by the households is also injections, since spending by the house expenditure in the year, all the other leakages, which is talking about imports, then you can point out the difference. Then moving on to the next question that we have, which is now our question 2.5, is saying how important is the capital formation for the South African economy. So we can see that we are going to raise different points on the importance of capital formation for the South African economy. So capital formation basically is referred to a capital accumulation. So we can explain that from the point of view of developing production infrastructure, which will increase the variety of goods produced, which widens the choice of consumer goods. So that's how it becomes important. It leads to developing production infrastructure, which will increase the variety of goods produced, which widens the choice of consumer goods. So basically, that's a point that we can also include. So on 2.5, we can see that it is important by first point, increasing spending on machinery and factories, etc., which will lead to economic growth. So that's through the tools to create its own natural resources, improving production which widens the choice of consumer goods. So this becomes the last point that we have for 2.5. And 2.5, our question is 40 marks. So this is what we have. So thank you for listening, and hopefully the video was helpful. And please, let's not forget to subscribe and share to our channel. Let's not forget to share the link to our colleagues who are doing economics grade 11. Let's meet again in the next video. Just for this video, I'm signing out.